My name is Anthony. I'm making a video today on VWAP. How to use VWAP, why I use VWAP, and why you should be using VWAP. So just a little introduction of who I am. Well, my name is Anthony. I've been trading futures for about 2 years now. I have traded pretty much every strategy that exists out there. Anything that you've seen or thought of, I almost guarantee that I have traded it at some point. Now, out of everything that I've traded or seen, VWAP is the absolute best thing that is out there, and really it's the one thing that actually changed my trading and turned me into a full-time profitable trader. So, to get started, what exactly is VWAP? I'm sure most traders have heard about VWAP, maybe they've thrown it on their charts, but most people don't actually use VWAP correctly. So, just to start, what is VWAP? VWAP stands for Volume Weighted Average Price. It's the average price traded during a session weighted by how much volume occurred at each price. Essentially, it's showing the average price paid weighted by volume for all traders that have traded during the session. To simply put, I view VWAP as the fill line. Imagine that you are in a position and you're taking trades on both sides, and the line is showing you where your current fill is. When you buy below the line, your fill is going to get better and it's going to move lower. When you sell above the line, your fill is going to move higher. Now, when price is above VWAP, we consider this buyers winning, buyers in control. The average buyer from the start of the session is in profit from their fill. When price is below VWAP, we can say that sellers are winning and the average seller from the start of the session is in control. It's not just a magic bounce line and it's not an EMA, it's a measurement of real money coming into the market and where that money is located. Alright, so why does VWAP work and why does it actually matter? Let's say you are a large trader and you have lots of volume. The biggest problem you face is actually having too much volume. How do you fill all of your contracts without moving the market against yourself and exposing your position? Well, you go to a broker that offers guaranteed VWAP execution services. You can look this up online yourself, and you will pay the broker to guarantee you the VWAP price for the session. The broker slices your order into small pieces throughout the session, and their algorithms execute the entire day, aggressively buying and selling around VWAP until all of your contracts are filled. And the key about all of this is that the broker absorbs all of the risk of guaranteeing you that VWAP. So they are going to do everything they can to hit that benchmark. This is why VWAP acts like a magnet throughout the day, because banks are contractually obligated to trade it. Okay, now that you understand the basic mechanics behind VWAP, let's talk about the deviation bands. Standard deviations measure how stretched price is from the fill line. If you know anything about statistics, a normal distribution tells us that 68% of data falls within one standard deviation, 95% within two, and 99.7% within 3 standard deviations. We apply this exact logic to our VWAP. As you can see on the indicator, I automatically plot out 1, 2, and 3 deviation zones. At any moment, I can look at the chart and I can see exactly how far a price is stretched from the fill line. So, we have our 3 zones. We consider the 1 standard deviation zone the VWAP fair value zone. We know this zone contains 60% of price action for a given session. This is considered normal and healthy price action. Algorithms are operating normally here. We consider the 2 standard deviation zone the extended zone. This zone contains 95% of price action. Trading at 2 standard deviation is considered extreme. Algorithms are operating aggressively here as they must guarantee the VWAP fill price. The 3 standard deviation zone is rarely reached. We consider price action here extremely extended. It's clear something significant is happening in the market. Now, the best part about VWAP is that it's completely fractal. VWAP mechanics are the exact same on every single time frame, from hourly, daily, RTH, weekly, and monthly. Different anchor points represent a different group of participants and traders and a different algorithm, but the behavior remains the exact same. Here is a quick guide to the different anchor types and the different participants. Monthly VWAP represents the largest of traders, being pensions and funds. Weekly represents swing positioning traders. The daily and RTH VWAP show intraday institutional flow. And rolling and anchored VWAPs can show scalpers and market makers. The best part about VWAP and this indicator is that you can go through and you can easily change the anchor point. You don't have to go and manually mark them out. You can come in the indicator, you can easily put it on. You can also add multiple anchor points if you want to see both the weekly and the RTH session at the exact same time. The styling is completely customizable. But yeah, you can play around with it yourself if you understood what I've been talking about. All of the time frames align. Alright, for the last part of this video, now hopefully you understand the basics of VWAP and the mechanics behind it, and hopefully you've put it on your chart at this point. But you're probably still asking yourself, how do you actually trade it? It's one thing to look at a chart in hindsight. Everyone's a really good trader in hindsight. But how do you actually execute using VWAP? The VWAP and bands tell you where something is going to happen, but what about when? When do I enter? Well, lucky for you, I've spent thousands of hours solving this exact question, and I have created 2 mechanical entry models based on order flow. So, first off, we have volume bars, and right away you can see in the bottom we have all of the volume, and I have characterized each candle into high volume, absorption, normal volume, or low volume. So at RTH open, you can see, of course, we have high volume represented by blue candles. Right away we can see some absorption here. We trade up higher, instantly 2 standard deviations away from the current RTH VWAP, also the previous day RTH VWAP right here. And what happens? Right away, I apologize. Right away we can see multiple absorption candles here, followed by a quick return back below VWAP. What is happening right here? Buyers stepped in and they got completely absorbed by sellers, who then pushed price down to the 2 standard deviation, where we got another absorption candle down here, came back up to VWAP, a breakout absorption candle right off the VWAP, came lower, compressed right here, and then we rotated higher. We got absorption at VWAP, it ended up failing. We call this a balanced price range. When an absorption candle fails to work, it becomes a failed absorption candle, and you can actually enter on the failure of it. Now, there is another entry model that I have created called compression. Compression is essentially price squeezing in a tight range before starting an expansion move. It's the coiling and the gathering of limit orders before an aggressive market move. Alright, so as you can see, this absorption right here was also a compression. So when you're looking at this right away, we're 2 standard deviations from VWAP. What do you know? You know that this is extended, and we are likely to see mean reversion. When we get this break below the compression and the absorption, you have a mechanically defined entry point and a mechanically defined stop loss. Depending on what your risk is, you can do the high or the breakout candle. And you're going to target, generally you want to look at the 2 standard deviations, or you want to trade until there is counter absorption, because you don't know when price is going to reverse. You want to get your base hit and you want to be done. Now, coming down here, this is not a good spot to trade. You don't know if we're going to go lower or not. At this point, you'd be waiting for a VWAP retest to see if sellers are going to defend, if the algorithms are going to execute at the volume weighted price, which we know is very likely. And you can see we come up, we hit the VWAP, we get the absorption entry, and we make new lows. Now at these lows, you can see we're sweeping the lows and we're failing to go lower, and then what follows is a bullish compression range that gets a breakout higher and then evidently comes back to 30-gauge VWAP. What happens at VWAP, what we can always expect to happen, is absorption. It doesn't mean that the absorption is going to work every single time, but this is an indicator to get out of your trade or go break even and see, do sellers defend at this point? In this scenario, the absorption failed and buyers were able to push through VWAP, pushing price higher. Now, where did we stop? Right at the 2 standard deviation band. And what happened at 2 standard deviation? We formed our bearish compression range, we traded back into fair value, and we retested the range multiple times before getting that final absorption, which then brought us back to VWAP. This is a low volume time, so you can expect choppy price action, but if you were confident in the trade and you were patient, you had a short opportunity here, fading a statistical extreme back to the fill price. And look what happens again at the fill price. Of course, as expected, you see high volume because this is where the algorithms are executing. You're almost always going to see absorption or high volume at the volume weighted average price. It's not always guaranteed to work, but it is giving you context and order flow clues, which can help you create a trade idea and find an entry. So yeah, you can see we get below VWAP, we get the bullish compression range. I'm not going to go into crazy detail about both of these indicators, as you can find out a ton of information in my Discord. I have PDFs on everything, explaining everything in tons of detail, and you can ask me questions. But just to finish off this video and show you how I'm actually trading these ideas and not just showing you what is happening in hindsight. But then again, once again, you can see we come up to 2 standard deviations and right away there is just a wall here. They're not going to execute past 2 standard deviations. We know this is 95% of price action. This is where those VWAP brokers will actually start to short their positions up here because they need to get price back into fair value where they can happily execute their client's order. If everything I've talked about makes sense to you and you want to learn more about any of these concepts while also seeing how I trade them every day, you can check out my website. It's anthonyslab.shop. I offer a free 7-day trial. You can join the Discord, view the community. There's no strings attached at all. If you don't like it, you can cancel. I do not mind at all. Um, I am here to help you guys, and I want to see more successful traders grow. There's a lot of bullshit in the trading industry, but I hope you guys enjoyed this video. I appreciate you watching, and I'll be sure to post some more content soon.